joining us from Chicago to analyze the Q1 GDP, which has actually missed the mark by a wide margin. 1.1% is the US GDP, which has come in. Estimates were around 2%. And even the PCE data, which the Fed tracks very closely, has decelerated. Is it reason enough to cheer? Anurag, you track that data very closely.
Ajay, morning. Ajay, the story actually lies below the headlines. I understand GDP is 1.1, but we all know that the economy can be in a slowdown, but yet inflation can persist. And that's a bigger problem called stagflation. So if you see, all the indicators are that the inflation is persisting. Look, I understand it dropped from 4.9, the core PCE, to 4.6. But that's nothing to cheer or a reason for Federal Reserve to stop. I understand, I belong to the camp, this is a very hated rally, Ajay. And many of us have sat this one out. But the reality is that there is nowhere to go ultimately, because at 20x, the multiples, earning multiples, the markets are expensive and inflation is really persisting. And I can give examples on the Coke results, Pepsi results, you name it. They're all hiking prices by 12%, 10%, and their volumes are dropping 2-3% every quarter, right? This story can't go on, Ajay, without something giving up.
So, Anurag, what's the assessment then as to how you're expecting things to trend then when it comes to the US markets? Just taking a look at the fact that there are talks about earnings recession. Are those actually worries that one should be cognizant of?
So Avan, the interesting comment from the Coke CEO this time was that, and he was asked exactly the same question as to, do you see a recession? And he said, look, we don't see any recession at all. And if we get the wage hikes, eventually we'll have to pass that cost on to the consumer. But we are not willing to stop just because there is a recession, which always seems to be 2 quarters away. And even that's the situation now, Avan. So earnings are not dropping. It is the same story that we are seeing for the last 5-6 quarters. Market expects that the earnings will drop. Well, how will the earnings drop? Because the consumer on the street is still holding the jobs good, It's a cycle ultimately, Avan. If the employment market holds, consumer spends. If the consumer spends, earnings grow. Employees go back and ask for a raise. The raise is ultimately passed on to the consumers. Top line of the companies grows. I think we are not able to break that cycle, Avan. So ultimately, I'm not surprised opportunistically, we are also trying to play the market whenever it hits a bottom of like 37, 3800. Then it rises up to 4,200 on S&P, and then we ultimately hit a ceiling and there comes some bad news and the market drops back again. We are kind of stuck in a range, but unless something gives up, as I said, either the inflation gives up or the earnings drop happens. Earnings don't seem to be dropping unless there is a severe recession. So we are just kind of caught in a cycle. We'll have to kind of persist and play within this range, Avan.
Right. All right, Anurag, thanks very much for joining us and explaining the importance of this data and how perhaps market is reading it.